what a difference a week makes. What's up, guys? It's Brandon from Amphibian Trading. As always, please hit that like and subscribe button, and then we're going to get right into it. So starting with the NASDAQ, what a difference a week makes. Last week, the market finished strong, finished right at the highs, while this week we had a positive close on Monday. However, the rest of the week we just sold off and we closed right near the lows. Now, most of the damage came on Wednesday, which is this maroon bar here with this little red triangle above it. So what happened on Wednesday was the NASDAQ broke below the 21 EMA, which is this green line, for the first time since May 4th, which happens to be 61 trading days. So we had a very nice sustained move above that moving average. Now we've broken below it. We attempted to get back above it, but we were rejected, closing below it near the lows. Now, on Wednesday, we also had the market navigator trigger 3 different sell signals, which dropped our exposure level to 90% and the exposure count to 4 for the first time in quite a while. However, even with the exposure count coming down, our buy switch does remain on. We still have a power trend, but we do start seeing our distribution days get a little bit elevated. We're at 5 now. If we were to get a 6th distribution day, that would put us at a full distribution count. One thing I'm watching though is this distribution day from Thursday, July 6th is about 21 days old now. Yeah, 21 days old. So if we can make it to Thursday without picking up a distribution day, that one's going to fall off because it'll reach that 25-day threshold that we look for when a distribution day is no longer relevant. But again, we'd have to avoid some distribution early in the week until Thursday. So what I'm going to be looking for now is how we respond to the 21 EMA and this 50-day moving average as it rises up. We do have an unfilled gap back from Tuesday, July 11th, which is right around 13,775, which with this 50-day moving average rising, by the end of next week, it should be right at about that level. It wouldn't surprise me if we came down, we tested that, and then pushed higher. That would also put the decline from the peak of this rally to right around 4.5%, which is pretty typical for what you see in a healthy pullback during a bull market. You'll see a lot of those 3 to 5% range pullbacks, so coming in at 4.5% would be pretty much in line with expectations. So that's something I'm going to be watching for, and I think during that period, that would allow a lot of the leading stocks to create nice bases and give us some potentially low-risk pivots in a few weeks that we can add our exposure to and potentially get another leg higher. All right, so this week, I want to go over a precedent I'm watching on a recent earnings gap for VRT using Facebook or Meta from 2013. So here is the chart from 2013 of Meta. Now, it was a recent IPO at the time. It had this initial decline, and then it rallied up, kind of making the center peak here right around 32.5 before it declined again, based, and then eventually we had this very powerful earnings gap here. Now, what stands out to me about this earnings gap is that it gapped up above all of this previous price action, with the exception of these first 2 trading days. Now, if we zoom into the gap, you can see price went up about just under 30% on this gap up day, 29.61 to be exact. The next day, we had an inside bar, and then the day after that, we pushed up higher, taking out the gap day high. And that's what kicked off a very, very massive move on Facebook or Meta. Now, if we flip over to VRT, you can see this is also fairly a recently new IPO. It's only been trading a couple of years. It was a SPAC, so we have this kind of long sideways action here. So I think the real trading action starts right here in about December of 2019. Now we had this first initial run up, kind of making the center peak here, 28.80. Now we had the bear market, so we declined. We've been basing, and now as we come up here, we have this big earnings gap. It's a little hard to see because I'm so zoomed out, but you can see if I just draw a line here on this 28.80, this gap went right above all of that previous price action, similar to how Meta did. And again, we went up about 30%, 29.25 to be exact. We have an inside day the next day, and then here we are today. We took out the high of the gap day, just like Meta did back in 2013. So this is one I'm going to be watching very closely for some nice risk to reward entries. Thank you for watching, and if you enjoyed this video or found any of the information useful, please go ahead and hit that like and subscribe button so you don't miss any future updates.